Okay, the real Bon. Sorry. Okay, so I'm the founder of Bon, and I started this company 3 years back to change the lives of 100 million Indians. Now, we all use Uber, Swiggy, Dunzo, and so on. But how many of you knew that they still employ only 3 to 4% of the whole blue collar sort of population? So just as how impactful, the life of a driver has been, we think that over time there'll be a incumbent or a large player organizing every single profession in due course, and that's the reason why we started Bon. It's a platform that extends credit to these contractors, gig economy workers. Oh, what happened? And basically anyone who's actually self-employed who has variable earnings. Now, how many of us who are actually salaried, we all know that it's a fairly sort of competitive market. All the banks and lenders are trying to go after salaried employees. But one of the sort of factors in the underwriting is that if you are self-employed, the call center hangs up actually. So try that. I mean, just say you're self-employed, they won't call you for a week. So that's the situation we're in. Now, just fast forward, 3 years, starting with one simple desk. So we started with one desk in Bangalore, and fast forward 3 years, we actually done over 6 lakh loans to the sector, where the average ticket size was just 800 rupees. Yeah, so now there's a report that came out that said that 120 million Indians migrated to the cities, and they actually look for 5 major professions. Ride sharing, delivery boys, security guards, housemaids, and housekeeping. Now we think that over time, we're seeing new alternative careers like fitness experts and teachers, online tutoring, interior designers at live space, and so on. So we think that this is definitely a space that is actually going to get more and more sort of included financially. Now we offer something that looks a line of credit that actually is a visible inside an app, as well as a card form factor, because we actually wanted to rely on the banking infrastructure made by the stalwarts in this room, because we have done 20 years of putting out POS machines and all the rails to actually do payments, which is why we could actually issue these cards that had acceptance all across the country. We're hoping that even through a UPI form factor, we'll be able to actually extend this digitally as well. We've localized the app, of course, and so the underwriting, we've done actually 6 lakh loans, where we're doing around 60,000 loans a month right now, and that's growing 10% month on month. And the average ticket size being around 800 rupees. But what the interesting thing that we do is that on a weekly basis, we actually give every single customer, based on our algorithms, a credit limit, right? And we actually then allow the card to be used only for work-related expenses. So in real time, when this card is swiped across the country, we actually, at this sort of at the switch level, basically decide to authorize or decline the transaction based on where they're using it. So we have actually mapped out 25 professions, their top 10 expenses, and we actually look at the merchant category code and the kind of merchant, their credit score, and actually decide whether to decline or, in 100 milliseconds, basically. Now, this is just a sort of for a lend. So the reason why I say we're a platform is that because lenders come into our platform where they can actually, disperse tranches. They can actually see, in a real-time basis, basically how many. So since every swipe is actually an auction between lenders, so therefore they're actually bidding for loans, and the winning interest rate basically gets to fund the transaction. So that's the reason why we say that these are 600,000 auctions that I've run. They can actually see at a per tranche level, how much is being dispersed. And this is a sort of ongoing sort of feature set that we're actually giving lenders. Some of the lenders in the room who are my partners will be wondering why this is not available to them yet, but soon, coming soon. Yeah, so we have done actually focus a lot on, we work with sub 100 crore NBFCs. So these are regional small NBFCs, catering to, let's say, the players in, customers in 6+ cities. But over time, we think that, we can actually reach a sort of larger penetration within that segment. And we think that as we add more lenders to the platform, because it becomes more competitive, the interest rates will fall down as well.
May I request you to move on to the question answer session?
Okay, yeah. So that's basically what we do. 75% basically are sort of new to credit, and that's what we do. Any questions? Yeah. Yeah, so that's a sort of so we actually are integrated into we actually partnered with companies like Uber, Swiggy, Dunzo, large aggregators. So we actually do a deduct at source. So the only model that we operate is in where we actually have a first dip on wherever you're earning with. So that's how we do it. And in fact, that's how we collect 98% of our repayments. Yeah, so whatever the interest rate the NBFC actually passes on to the customer, that's basically that's between them and the customer. We have an annual recurring fee that we charge every customer, almost like a annual processing fee, and we make a revenue from the interchange income on every transaction as well, the interchange income from the network. Yeah, so we actually grew 6x, year on year, but I know that won't make much sense. But we can take this offline. Yeah. 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 Yes. Yeah. So I think it's completely true for a branch-led model, but since we are a sort of digital platform, and we are actually acquiring these customers, doing the KYC, setting the limits, and this whole thing is happening in a real-time basis. The only thing that they're actually deploying and doing is actually deploying capital, and we're actually integrated into the LMS and so on. So from that perspective, they see us as partners actually doing a lot of heavy lifting for them, going after a segment that they typically would not have access to. All right. Thank you so much. Thank you.